I've selected the topic, why am I still failing in trading? Most of us has experienced it in our trading journey. We constantly lose money, we get frustrated and looking for an answer. I will start with a short story. One day my son came back from school and told me that today during his science class they learned the definition of insanity that was defined by famous scientist Albert Einstein. He said, according to Einstein, the definition of insanity is doing the same thing over and over again but expecting different results. At that time, I was struggling with my trading. I was constantly failing from challenges and buying new challenges with the hope that this time I'll surely pass the challenge. If I pass phase 1, then failed phase 2. It was very frustrating, but when I heard the definition of insanity from my son, so that was the light bulb moment for me. I'm sure most of you watching this video can relate to it when we don't change any trading habits but expect a better outcome. Now let's delve into the core reasons why traders often find themselves stuck in a cycle of failure. So first item that I have in my list is trading psychology. You may be surprised to see it listed on the first item in the list. But let's delve into it and see why this is the first item. I was failing because my main focus was to search for best strategy on YouTube or Forex Factory or on any other platform. I never tried to understand the importance of trading psychology. In my experience, it contributes 80 to 90% role in your trading success. Understanding trading psychology is crucial for success in the financial markets. It involves recognizing and managing emotions such as fear, greed, and overconfidence, which can significantly impact trading decisions. Developing discipline, patience, and emotional resilience is essential for maintaining a balanced mindset during both winning and losing trades. Traders who master their psychology are better equipped to stick to their trading plans, manage risk effectively, and adapt to changing market conditions with confidence. Successful traders read trading psychology books, watch the relevant videos, or even work with a trading psychologist. We have to know about ourselves. We need to be aware of our mental state when trading. We are our own worst enemy. Our brain is not trained for trading. When we execute a trade and it goes against us, then our brain signals us that this is a threat. Or when our trade goes into small profit, when we get excited and quickly close the trade. Second item in my list is trading plan. I was failing because I did not have a solid trading plan. Or if I had a plan, then I was not following it. I was buying when bullish candle was forming and closing the trade when it was retracing, and it was an endless cycle. If you want to succeed, then write down your trading plan, and it should include all your rules: when to enter, where to set up your stop loss and take profit, and stick to your trading plan. You can have the world's best trading plan, but if you're not going to follow it, then you cannot get the positive results. If you haven't subscribed yet, then please click the subscribe button so you won't miss out on any future videos. And if you like the content, then please hit the like button. Next item that we need to focus on is risk and money management. I was failing because I was not following any risk and money management plan. Initially, let's say I tell myself that I will take only 0.5% risk per trade, but right after taking my trade, when trade went against me, then I added another position with the same risk or higher with the hope that it will go in my direction. It further went against me, and then I changed my SL with the hope again that it will go in my direction. So I further increased my risk. So at then end on that trade, I will take a loss much higher than my original loss that was supposed to be only 0.5%. Effective risk and money management are crucial components of successful trading. To manage risk effectively, consider implementing strategies such as setting up stop loss orders based on predetermined levels of risk per trade. Additionally, diversifying your portfolio and avoiding over-leveraging can help mitigate potential losses. It is also essential to regularly review and adjust your risk management plan as market conditions evolve. By prioritizing capital preservation and adhering to disciplined risk management principles, Traders can enhance their long-term profitability and minimize the impact of adverse market movements. Learn how to add to a winning position by still keeping the original risk as per your original trading plan. So next item is strategy hopping. I was failing because I was always looking for best strategy with higher win rate. If I started working on one strategy and it worked for a few days or weeks, and due to the change in market behavior, I was getting some losses, then I decided that this strategy is not working. I need to look for a better strategy. Again, this is an endless cycle where you are keep looking for a holy grail. So what is the solution? Create a strategy that matches with your personality and it has an edge in the market. You need to spend some time backtesting and forward testing that strategy to determine the win rate and other related data. In this way, when dealing with losing streak, then you won't freak out. You will know that your strategy can have some losses, but as stick to your plan, then you'll be profitable. And the final item in my list is journaling. I was failing because I was just executing trades and I was not keeping any trading records. I always heard from successful traders that you need to do journaling, and I always said, it is too much work, especially if I'm scalping, and I don't have time to write this data. But guess what? I was wrong and paid the price. So what is the solution? Start journaling your trades. It does not need to be very complex. You don't have to write down data in Excel or online software. In the beginning, you can simply use pen and paper and create the fields that you need to document it, such as trade time, instrument name, trading logic, mental states, time when you close the trade, and logic behind it. There could be a lot of other things that can be added to this list, but I don't want to make it too complex. Just by focusing on these areas, it improved my trading results significantly. I finally became a funded trader. When I take trade and if it goes against me, my heartbeat does not increase or I don't start sweating because I am now following my trading plan. My risk is under control. My money management is good. I can take few losses and it won't destroy my account. Learn how to accept losses since it is part of trading game. Okay, to wrap things up, let's remember what we talked about today. Trading is not just about picking the right strategy. It's also about wondering how our mind works, sticking to a plan, managing our risks, and keeping track of our trades. So what should you do now? Take a good look at how you are trading and see where you can make some changes. Make a plan that fits you and stick to it. Remember, it's all about being disciplined and staying focused. If you liked what you heard today, hit the like button and subscribe to our channel for more tips on trading. And don't forget to share your thoughts in the comments below. We want to hear from you. Thanks for watching and keep on trading smart.